Yeah,
But
it is.
um, let's jump into what the topic is for this week, which is looking at how buyers are able to look at the landscape and understand what financing is all about. And because Josh has spent a great deal of time over the last 15 or 16 years helping home buyers to figure out their financing issues that have changed and evolved, and yet there's been a lot of similarities year over year over year. Josh, when you meet with a buyer, especially if it's a first time buyer, um, are there any things that you need to know? What are the kinds of things that you talk to them about to try to get a sense of their finances, their background, their concerns when you're first getting this process started?
So yeah, so one of the biggest things that happen when I'm speaking to especially a first-time home buyer is that there's a lot of anxiety in the idea of just getting a loan in general, just applying for the loan. So it's pretty straightforward in what the requirements are, what the basic requirements are. If you're getting a basic FHA loan or a basic conventional loan or even a VA loan, there's other loan types that are a little bit more, esoteric or more, streamlined for different people in different situations. But the general criteria are, they've been in the same field for the last 2 years. So whatever they work or whatever they do, say they were a plumber, they've been a plumber for 2 years. You could have been with multiple companies over those 2 years, but you were still generally a plumber. Same thing. Do you have any derogatory payments or any derogatory items on your credit? And just really getting a good grasp of what's on there, what's on your credit report, and knowing what your debts are. Because one thing I see a lot is someone may make a good income or a decent income, but because there's so many derogatory or late payments or whatever it may be on the credit report, they can't get qualified, or their income, their debt income ratio is substantially higher on their debt side that they don't really have enough to afford the home they're looking for. And there's ways to overcome that, and it's just really about being prepared when the time comes.
Yeah. So when you're chatting with them, and this goes for both somebody that has a home to sell and wants to buy another home, and maybe using some of the money that they get from the sale of their home to buy the next home, but they're still going to need a loan to buy that next house. And so they have to qualify for a loan. Are there any commonalities among buyers, or really are they all very different from buyer to buyer?
There's certain commonalities, but if you're looking at someone who owns a home already, they're going to purchase their next home, and they need to sell their current home in order to buy the next home. There are a few things that we've really kind of developed to make that easier, because the biggest concern, more than likely, and really over the last 16 years, is always this: they're worried about the possibility of having two mortgages, finding that next home, buying that next home, and then not being able to get their home sold, or finding some reason where, or some situation where they have no home, so they sold their current home and they don't have the next home. So there's ways where we actually can get you pre-approved to buy your next home first. You're in there, your next home, and during that time, your monthly mortgage on your previous home is already paid, so you have plenty of time to get your home sold. So you never have to worry about the possibility of having no home. But when it comes to, say, a first-time home buyer, when it comes to financing in general, I like to think about it point of view of I like to think about really in the point of view of, if you're looking at getting a loan, whether you have a home or not, don't have a home, you have to look at from the creditor's point of view, someone who's giving you the $200,000, $300,000, $400,000, $500,000, and making sure that you're worthy of getting that money, that they feel confident that you're going to pay that money back. Those are the most common. It goes without all loan types.
Yeah, because it's funny. We say, well, we're going to get a loan, but that's a company, a group of strangers who are looking at you, and you say, hey, come on, give me $300,000. And they say, well, we would like to do that as long as we have some assurance that you can actually pay that $300,000 back.
And it's funny too, because I'll talk to some, especially first-time home buyers, primarily first-time home buyers, and the first question I ask is, okay, do you have a job? And 99% of the time, the answer is yes. Whether they had a job a month or 10 years is a different conversation, but 99% of the time, the answer is yes. But there is that 1% of the time where the answer is no. And not really much you can do about that. And I've gotten people hired. Because I speak with so many people, and I network and have so many, worked with so many people over the years. I've gotten people jobs just because this person's here, and it just lines up perfectly. But the question you asked earlier is, are there some commonalities between whether you have a home or not have a home when it comes to loan types? Number one, you do have to have a job. So let's just get that out the way.
Yeah. And jobs come in all different types, and that makes a difference in the kind of loan that you get, because there are people who have jobs and they get paid a salary weekly or biweekly. Taxes are withheld. They are W-2 job holders. And then there are people who they work, they have a job, but they are not what you call W-2 staffed employees. They are independent contractors. They're 1099 individuals, and they have a job. They're employed by themselves, and they are selling their services to an individual or a group that is paying them for their services. And lenders look very differently at people who have a Monday through Friday W-2 job versus people who have a Monday through Friday or Monday through Sunday 1099 employment situation. And all of that is part of the process of sorting through whether you can get a loan, but what kind of loan and what lenders work with the different types of employment situations, because they're set up to understand both how to receive your information and also know how they can get repaid based on how it is that you get paid and get employed. But Josh, before we move on, one of the
I want to
things,
add something to that. So a little that goes along exactly with what you're saying. So I had a guy, a really good friend of mine. He became a good friend of mine. He was actually one of my next door neighbors, and he was a professional golf caddy, and that is what he did. That was his job day to day. That was his job. And I don't know much about golf. I played golf, hurt my back, and didn't play again. But one thing I understand about golf is for a short amount of time. You have a set time of the year that you play golf. You're not, there's not many golfers that play in a blizzard during December. So what occurs is he worked for 3, 4, 5 months a year. He was a professional golf caddy, so he actually made a decent income with that money. He saved it, and then he worked in his garden the rest of the year. Every time I saw him, every time I went home, every time he just worked in his garden and yelled at kids for walking near his garden during the day. Still a great guy, but that's what he did. That's his life. But he was able to buy a home, and he was able to buy a home even though he worked 4, 5, 6 months a year and worked in his vegetable patch the rest of the year. He was able to buy a home because they were able to use his income, average it over 2 years, and he was good to go. So there's a lot of different loan types. Some don't require taxes. Some that we can go through each one of those, but there's a way, depending on who you're talking to, what lenders you're speaking with, and there's a reason why I recommend mortgage brokers versus say a bank, and we can get to that if you're interested.